Hello investors. It's been a month of hyperactivity. We've had so many events. We've had global markets, the equity markets which are doing very well. So that's a positive. We had a budget which was very widely accepted, which actually triggered an up move. In fact, I thought the market would approach lifetime highs the way it took off. Unfortunately, we also had the whole Adani saga, and that has affected sentiment in the short run. Going ahead, what's going to matter for us is the performance of our portfolio companies. So the month of January is when the numbers have started coming out and we see a lot of impressive numbers, and that really gives me a lot of positivism and hope. So let me discuss all these four things with you. First, let's take global markets. The global markets have been actually rallying beautifully for the month of Jan and Feb. India, in fact, has been one of the few or probably one of the worst performing. But nothing to fear. India, remember, last year was probably one of the best performing. So very often, you run up ahead, you need to take a rest. And this rest or pause has been caused by this whole Adani saga. So if you look at the chart I'm sharing with you, it's the S&P 500. So it's like the mothership, the large cap 500 US stocks. You'll find that for the last year or so, the black line shows that how it's been trending down. However, in the last month or two, you'll find that there has been a very good up move. And this trend line has been broken. That means the whole downtrend has changed and new uptrend starts. Your markets in Europe are doing well. A lot of Asian markets are doing well. So with that as your tailwind, India will not underperform for a very long time. Yes, there are some domestic issues which we'll talk about, but once they settle down, I feel that India can also do a catch up. Just as we were an early starter, we are taking a pause right now. Once our problems are solved, India would again do a very good catch up. The second thing was the budget. As investors, we were all bothered about the tinkering of the long-term, short-term thing. Fortunately, nothing much has happened. But the important thing is that there has been a lot of stimulus and allocations towards revival of infrastructure. And that is very important. Because as I've been telling you that we have been investing a lot in the capex cycle, in the infrastructure play, and you will see that in our portfolio of stocks, and we've added one more this month, is oriented towards a revival in the industry. We have industry facing banks, we have industry facing stocks, and the budget has given it a further boost. So we feel very, very positive about the budget and its impact on your portfolio. The third area, which really is the elephant in the room this month, has been the whole Adani saga. So if you can look up on the screen, you will see Adani Enterprises. Again, it's a Nifty 50 stock, down 75%. That's massive. Adani Ports, another widely held company by even mutual funds, is down about 60%. The good news is that we had no Adani stock in our portfolio. And the reason is that yes, these were trending prices, but what eluded them were trending earnings. And the philosophy of marathon trends is about having stocks with trending earnings and trending prices. That means stocks where the prices are going up. Yes, Adani stocks, the prices were going up, but the earnings were never there or never good enough. And that is why we have avoided Adani stocks in our portfolio, and that is very, very positive. However, every such activity does have a little collateral damage. And two stocks in our portfolio, two banks, PSU banks, SBI and BOB, have lent. So we were really a little concerned, a little nervy about it, that if this thing spirals off, we could have a problem. But the good part is that the total allocation in the loan book to this group is relatively small. And secondly, the numbers that they came out with, both BOB and SBI, were fantastic. So we feel that this storm should ride through. Hopefully, even as far as the markets go, once the collateral damage is limited to these few stocks, and this will go on for a long period of time, the market will revive. That's our kind of understanding as far as the whole Adani group goes. What we find is that in the month of Jan, there has been a lot of volatility in some stocks. So that is why the numbers of Jan look a little weird. Let me explain this with an example. One of the stocks in your portfolio is Apar Industries. So if you look at the chart of Apar, you will notice that in the month of Jan, the stock fell 25%. And that got us really worried. We were trying to look for news, we were looking for selling patterns, and we could find nothing, no wrong for the stock to fall 25%. But as far as the numbers go, for the month, this has been a major drag on your portfolio. However, at the end of the month, it came out with super numbers and the stock went up 50%. So for the month of Jan, you will catch a lot of stocks which experience some bit of selling due to a run up in the numbers. However, when the numbers come which are so good, you will find that this stocks just ramp up. We have seen that in Apar, we will see that in LG equipment, you will see that in a lot of stocks where you see or experience volatility because of the results of the month. So the underperformance of Jan very often catches up in the next month, and we are seeing that in a lot of stocks in your portfolio. We've also made some changes. We've added a stock called KEI Industries. Now KEI Industries is a cable manufacturer. Of course, very good earnings, what we term as trending earnings. And as you can see, the price is also done, it's just broken out to a lifetime high. KEI specializes in high tension cables. High tension cables are what you see at these electric transmissions that there is. Also, KEI has got very heavily invested in the retail side. So in housing, you will see KEI wires as a very big, lot of advertising and things like that. So KEI is something that is doing very well in the cable business. And we have added this to your portfolio and some other stocks. So what you will notice is that between last year and this year, we made a lot of shift in the portfolio. And the reason for this is that we noticed that the nature and texture of this market is changing. Around COVID, it was dominated by stocks which were defensive. They were generally high PE stocks and with very famous names. But the market has started punishing those stocks. Like we sold some stocks earlier, like DivisLabs. It was a marquee name. We loved it. We rode it for so many years. While selling it, we were wondering that, it was painful. But you notice that subsequent to that, as the numbers get muted in these high quality, high PE stocks, there is immense damage. And we really don't know how long it will take. So selling a stock like that is a good decision. So we continue to do that. And the texture of your portfolio, as I said, is moving more towards infrastructure. We feel that the whole industrials, infrastructure, capital goods space is going to be the next big theme for the next 2 to 3 years. The reason is that as and when there is a revival of the industrial cycle, these companies are going to play out big time. We have seen something very similar play out between 2003 to 2008. That's when the whole infra cycle was playing out. And the kind of wealth that was created in these stocks was immense. So we have moved the texture of your portfolio towards industrials, infra play. Even in the banking space, which we hold, you'll find are more industrial facing banks. And we feel like this will play out in the months to come. With this, I leave you. The good news is that as the numbers are coming out, they are very, very impressive for the portfolio stocks, and the revival in stock prices is very, very sharp. Thank you very much. See you again.